Why do most people work their entire lives and still never feel financially free? They wake up early, they work harder every year, they save what they can, and yet somehow wealth always feels far away. But here's the uncomfortable truth. The biggest investing mistake isn't losing money. It's wasting time. Because while most people spend decades chasing quick profits, trends, and shortcuts, the truly wealthy are quietly playing a completely different game. A slower game. A boring game. A game almost nobody has the patience to understand. And by the end of this video, you may never look at money the same way again. We live in a world obsessed with speed, fast food, fast entertainment, fast success, and now fast money. Everywhere you look, people are trying to get rich overnight. Social media is filled with screenshots of massive gains. Teenagers claiming they became millionaires from one trade. Influencers selling the fantasy of instant wealth. And slowly, people begin believing that investing is supposed to feel exciting. But that belief destroys more wealth than almost anything else. Because real investing was never designed to entertain you. It was designed to reward patience. The problem is, patience doesn't go viral. Nobody posts screenshots of holding the same investment quietly for 15 years. Nobody celebrates consistency. Nobody brags about discipline. Instead, people chase adrenaline, and that changes the way they think about money entirely. Investing becomes emotional, impulsive, almost like gambling. People buy when everyone feels optimistic. They panic when fear arrives, and they repeat the cycle again and again, wondering why wealth never stays. But the market has a cruel way of punishing emotional decisions, especially short-term ones. Most beginners enter investing with one dangerous expectation. They believe money should grow fast. If an investment doesn't double quickly, they lose interest. If prices fall, they panic. If someone else gets richer faster, they feel left behind. And this creates one of the biggest financial traps in modern history. People quit before the process has time to work. Think about it. Most people overestimate what they can achieve in 1 year, but dramatically underestimate what can happen in 20. Because wealth creation is rarely explosive at first. In the beginning, it feels invisible. Slow growth, small gains, tiny progress, and that's exactly why most people fail. Not because investing doesn't work, but because the early stages feel emotionally disappointing. Humans are wired to seek immediate rewards. We want proof right now, results right now, success right now. But long-term investing operates on a completely different timeline. And once you understand that timeline, everything changes. Imagine planting a tree. For years, it looks unimpressive, small, weak, barely growing. But underground, the roots are expanding silently. Then, eventually, one day, the growth becomes impossible to ignore. That's how compounding works. At first, the progress seems tiny. Then, time begins multiplying everything. Your money earns returns. Then, those returns begin earning their own returns. And over decades, growth accelerates in ways most people cannot emotionally comprehend. This is why time matters more than timing. Most people spend their lives trying to predict the perfect moment to invest. But the wealthy often focus on something much simpler, staying invested, because missing a few of the market's best days can dramatically reduce long-term wealth. And ironically, those best days often happen during periods of fear. That's why emotional control becomes more valuable than intelligence. You don't need to predict every crash. You don't need secret information. You don't need to be a genius. You need discipline, consistency, and the ability to think long-term in a world addicted to short-term thinking. The wealthy understand something most people ignore. Ownership changes everything. Poor people usually work for money. The wealthy focus on owning assets, businesses, stocks, real estate, investments that continue working, even while they sleep. And over time, those assets begin creating freedom, not instantly, quietly, almost invisibly. That's the part social media rarely shows you. Real wealth often looks boring for a very long time. No flashy excitement, no overnight transformation, just steady accumulation. Year after year, crisis after crisis, recession after recession, and eventually the gap becomes enormous because while others spent decades chasing quick wins, disciplined investors spent decades building ownership. The difference isn't luck, it's mindset. Long-term investors think differently about time. They don't ask, how fast can I get rich? They ask, how long can I stay consistent? That single shift changes everything. But this is where investing becomes psychological, because staying invested sounds easy until fear enters the room. And fear always enters the room eventually. Markets crash. Headlines become terrifying. People start predicting economic collapse. Suddenly, everyone believes the world is ending. And during those moments, most people panic sell. Not because they're stupid, because they're human. Watching investments fall triggers survival instincts. Fear takes control. And emotionally, selling feels safer than waiting. But history tells a fascinating story. The investors who usually win long-term are not the ones who avoid every crash. They're the ones who survive them. Every major downturn in history felt terrifying while it was happening. Yet, markets continued recovering over time. Businesses adapted, economies evolved, innovation continued, and patient investors who stayed disciplined were often rewarded the most. That's why investing is less about predicting the future and more about controlling yourself. Your emotions are often the real battlefield, not the market. And this lesson matters now more than ever, because modern culture constantly sells shortcuts, quick money, quick fame, quick success, but shortcuts often cost people years. People jump from trend to trend. They chase hype. They restart over and over again. Meanwhile, time quietly passes, and time is the most valuable asset any investor has. Not because time guarantees success, but because time gives compounding the space it needs to work. Even small, consistent investments can become life-changing when combined with enough years. That's the part many people discover too late. The earlier you understand long-term thinking, the more powerful your future becomes. Because wealth is rarely built in dramatic moments. It's built in ordinary moments repeated consistently for decades. One investment, one decision, one disciplined habit at a time. And maybe that's the biggest truth about long-term investing. It's not really about money. It's about behavior. Patience in a distracted world. Discipline in an emotional world. Vision in a world obsessed with immediate gratification. Most people spend their lives trying to look wealthy. Few spend time learning how wealth is actually built. Slowly, quietly, patiently. And one day, the years pass anyway. The question is, when that day comes, will your money have been working for you or against you? Because in the end, the people who understand time often understand wealth, and the people who waste time chasing shortcuts usually pay for it later. If you want to understand wealth, money psychology, and the financial system shaping your future, subscribe now.